Hi, my name's Laura Chipp and I'm VAT Director at VatNav. We do a lot of VAT and TOMS. I've specialised in TOMS myself for about 13 years now. So I wanted to talk today about TOMS, what it is, and broadly speaking, how to put the calculation together. We get a lot of requests from clients about TOMS examples. Well, I suppose it's quite difficult to come up with one example that fits all. HMRC, I think, have tried to do this and perhaps with limited success. What I'm going to do today is just talk you through the basics and loosely speaking, how the calculation works for a couple of different types of businesses. So, TOMS, the Tour Operators Margin Scheme. So, firstly, what actually is it? TOMS is a tour operator's margin scheme. It is still VAT. I think a lot of people say, is there a separate TOMS registration? And what do I need to do? Do I need to tell HMRC I'm using TOMS? The answer is no, not really. It's a VAT registration. We're looking at VAT. It is just a different way of accounting for VAT when certain criteria is met. So how it started off when the UK was a member of the EU, TOMS was obligatory in many circumstances for businesses within the EU, really just because that's sort of how it started, and it's just a requirement based on the EU VAT directive. Since leaving the EU, when we had Brexit, the UK, strictly speaking, didn't really have to continue with TOMS, but it decided to adopt the TOMS legislation into its own law. Now, the scheme is a little bit, not to say pointless, but it doesn't do as much as it did when we're in the EU, now that it's just a UK-only version. But broadly speaking, it operates exactly the same as it did when we were in the EU. And it applies, the name's a bit misleading because it applies not only to tour operators, but to any businesses which fall into the right circumstances. We deal with all different types of businesses that use TOMS, charities, wedding planners, event organisers, anyone who fits the circumstances that we're going to talk about a little bit today. So when does it actually apply? So you have to have these four conditions being satisfied in order for TOMS to apply. But when it applies compulsorily. So you have to use it. So firstly, there has to be a supply of travel services. Now, that's the first question. What is travel services? For tour operators, that's quite obvious. It's normally the supply of a holiday. But the six primary travel services that we're looking at are accommodation, transport, guides, trips and excursions, car hire, transport hire, and the use of airport lounges. So if your business has at least one of those travel services, we need to look at whether or not TOMS applies in those circumstances. It also applies to other stuff such as catering, admission, and what HMRC call similar services, if they are supplied within a package with one of those first six, so with accommodation, for example. So if you did a theatre weekend, including accommodation and theatre tickets, the whole thing will fall within TOMS. Whereas if you just sold tickets on their own, it wouldn't fall within TOMS. The second point is that the supplier must be acting in their own name. So you must be a principal. If you're acting as disclosed agent and earning fees or commissions, you're probably not going to be within TOMS for those particular sales. The third point is that the services must be acquired from a third party and supplied without material alteration. Now, in the context of a tour operator, that really just means that you're sitting in one office, you're not really going to the location, doing anything. That's how we tend to look at it. So if you're really just having little part to play, you're not actually adding anything to the service itself apart from, your own services of perhaps, negotiation and meet and greet, that type of thing. If you're going to a hotel somewhere and physically doing something, so you're fitting it out, for example, or you're driving the bus that is the transport, you're normally having to materially alter what you've purchased in to sell on. We're going to cover this in a bit more detail in another video when we look at service departments. That's a really common question for that sector of the sort of TOMS industry. But broadly speaking, in order for TOMS to apply, you shouldn't be adding very much to the service itself. Your kind of service should almost be from a step back, maybe from an office completely remotely and separately to the services. And the fourth point is that the services must be supplied for the benefit of a traveller. Now, this must seem an obvious point, but I suppose there's two key points here. Firstly, we have to look at it as someone is actually going on a holiday, so they are travelling. This is quite important when we're looking at service departments. There's a difference between, for example, supplying accommodation to someone who's staying there long term as a resident, and someone who's visiting a place and using that accommodation. The second point is that there's a whole question about if we supply the services to another business for onwards resale, does TOMS actually apply? Because in that circumstance, we're not actually supplying the services to the traveller direct. Now, in the UK at the moment, there's an option around this. So if you're selling services wholesale, or if you're selling them services wholesale, you sort of have a choice. There's two separate bits of law that we rely on. And if you're supplying something to a business for onwards resale, there's an argument either way, either you use TOMS or you don't. So it's perhaps something to discuss in a bit more detail if those are the sorts of services you're supplying. Now, what does TOMS actually mean? Broadly speaking, when TOMS applies, the supplier, so you in this sense, can't recover any of your input VAT that you incur on direct costs of travel. So when we're talking about direct costs, we mean the cost of the travel service itself. So, for example, if you're going to do accommodation within TOMS, you may buy in hotel accommodation from a hotel. That hotel will have charged you VAT. You can't recover that if you're within TOMS. You can still recover VAT on anything else that isn't a direct cost of the service. So the overheads of your business, anything that you do, what we call in-house. So if, for example, you sort of sell a holiday, but you actually supply part of it yourself, maybe you're a tour guide yourself, anything that sort of is done from your own resources, you can still recover VAT on that. And also things like agents' fees and commissions, because they're not taken as direct costs for TOMS themselves. Now, what happens with output VAT, so that's the input VAT bit discussed. What happens with output VAT is we don't account for output VAT on the full selling price of our TOMS services. We only account for VAT on the margin made. So obviously you don't get the input VAT recovery on your purchases, but what you do get to sort of compensate you for that is that you don't account for output VAT on the full selling price. You only account for it on the margin you make. Now, if the travel service itself takes place in the UK, the margin is standard rated. So you would have to pay UK VAT on the margin you make. If the travel takes place outside the UK, the margin is zero rated in the UK. Doesn't mean there's no consequences overseas. There may be. That's something that needs to be checked on an ongoing basis. But there's no UK VAT on that part of the margin. The other point there is that no VAT invoice can be issued to the customer. This can be an issue if your services are sold to business customers. Business customers, they're purchasing a trip abroad, they may very well expect you to issue them with a VAT invoice so they can recover the VAT on their purchases. You can't do that on the TOMS, unfortunately. So where we've got business travel taking place, often beneficial to try and come out of TOMS. There's various ways of doing that. We can, I'm sure, discuss that another time. Now, how does TOMS actually work? Now, I talk about, standard rated VAT on the UK margin on a trip, or zero rated margin on another trip. Actually, what we do, we don't do it trip by trip. We look at TOMS on a global yearly basis. So we look at all of our trips in a certain year. Saying trips, it could just be accommodation on its own under the right circumstances, whatever you like, but let's pretend we're looking at a trip for the time being. We look at everything that's happened in a year, in your financial year, in order to do the main TOMS calculation. Sort of historic reason for this is because at the time of travel, it's often quite difficult for the typical tour operator to know the exact margin they're going to sell travel at. You may be doing rebates or commissions coming back to you from suppliers in due course. You may have currency fluctuations that will only be regularised at year end via your accounts. And there's, I'm sure, various other reasons for other companies too. But for that reason, we don't look at each trip on a trip by trip basis. We look at it on a year end basis. Throughout the year, it doesn't mean you're not paying VAT, unfortunately, you still do. But what we do, instead of paying the VAT on the actual margin, we pay a sort of provisional amount. And I'll talk you through how to go about that, I think, at the end of this presentation. But really what it is a calculation based on last year's results. We look at the previous year and we say, right, in this previous year, we paid around X% of VAT on our TOMS turnover. So we're just going to estimate this for this current year, this same X%. And then at year end, we true it up, we find out what's actually due, and there's a difference either due to you from HMRC or paid by you to HMRC, which is what we call the TOMS annual adjustment. So it sounds probably a little bit, it's not as easy to talk through. So we're going to have a look at some graphic examples in the rest of this document. So in the sort of provisional versus annual split works a little bit like this. So on the screen at the moment, we've got some fake figures for let's say it's a travel tour operator for the year. Now, this tour operator is a calendar year end. So we have the 31st December year end. So our TOMS year follows this. Our TOMS year runs from 1 January to 31st of December. So each quarter on our VAT returns, in the March quarter, we've got TOMS turnover of 1,000. We're going to say last year's provisional percentage is 2%. And again, I'll talk you through at the end of this presentation how that 2% or the equivalent has come about. But all we say there is in our March VAT return, we say, okay, our TOMS turnover is 1,000. We're just going to times that by 2% and pay £20 to HMRC as TOMS output VAT. And we do the same in June. Our TOMS turnover is 3,000. We say last year's provisional percentage is 2%. So we just say 3,000 times 2% is 60. And we pay that to HMRC. And that's all you do in the course of the year for TOMS. It's really straightforward. What's not as straightforward then is at year end looking at the TOMS annual adjustment. Now this very, very straightforward example, what we would do at the year end is say our total TOMS turnover was 11,000 for the year. Our TOMS direct costs 8,900, which gives us our TOMS gross margin of 2,100. Now we again assume all this is taking place in the UK, so it's all UK VAT. There's no split between UK margin and non-UK margin. Let's pretend the entire travel was UK based. So all we say is our margin's 2,100. We carve out VAT at a standard rate from that margin. And the reason it's VAT at 1/6 is because our 2,100 is our gross VAT inclusive margin. The current VAT rate is 20%. So what we're trying to do is get 20 out of 120. So we say the 2,100 in this example is 120%. We want the 20% out of that. So we do 20 over 120, which just simplifies to 1/6. So it's quite simple at the moment. It was a little bit more difficult when the VAT rate was 17.5%. I think it was 7 out of 47 we had to do for TOMS, but this is a lot more straightforward. We have VAT. Literally, it's just margin divided by 6 if everything's UK based. So the actual VAT we should have paid was 350. Now, our VAT paid provisionally over the year was, for some reason I haven't totaled that up, but I think it is 220. So if you look at the row that says VAT paid provisionally, that's our turnover times 2%. We paid £220 throughout the year. We actually should have paid £350 to HMRC. So our annual adjustment is just the difference between those figures, which is the £130. So all you would do is in your first quarter of the next financial year, in that March quarter, just pay £130 to HMRC. And that's, I'm not going to say it's that straightforward, because it isn't. You've still got to sort of work out what is turnover, what are my direct costs, but that's kind of the very basic premise of TOMS. So yeah, what is TOMS turnover? It's the full gross selling price of the travel services. So gross VAT inclusive price, whatever you've sold it for. We exclude from this cancellations, because for TOMS purposes, cancellations are not a supply. Any compensation payments, exclude that. And obviously anything you do that actually isn't TOMS itself. So there's various businesses, quite a lot of businesses actually, that may only have some sales within TOMS. Exclude all those from your TOMS calculation, completely keep them separately. It's a nightmare if you don't. So yeah, that's probably my first tip actually, is to completely put TOMS and non-TOMS business in separate categories altogether. And then TOMS costs, gross direct costs of travel only. So include everything that you need within the TOMS service, but exclude anything that isn't itself a supply of the accommodation, the transport, the trips. So a lot of people say, is agents commission within TOMS? The answer is no, because agents commission isn't itself the supply of a travel service used by customers. It's not accommodation, it's not transport, so we exclude it. So yeah, but obviously the bonus behind that is that you can recover any VAT that you're charged from those services, because they're now not TOMS costs. So in terms of the actual calculations themselves, these are all online on our website as well, by the way. I'm just going to talk through them quickly here. But if you want to have a look in a bit more detail, obviously pause this video or just have a look on our website. We've got them down in writing on here. But this is perhaps a typical TOMS calculation for a UK business at year end. Obviously, you've got to go through the hard work of finding out what your turnover and costs are. But now we've sort of, we've done that, and this is the calculation. So here we've got our TOMS turnover is 300,000. Our TOMS costs are 240,000. So our gross profit margin is 60,000. Now, the question for TOMS, obviously, we split out standard rated margin for UK travel and the zero rated margin attributed to non-UK travel. Here in this calculation, it's a UK only business, which in this context means it only does UK travel. Now, in this case, we know that the entire margin is going to be standard rated because we've got nothing outside the UK. So we know that 60,000 is all UK travel margin. So in terms of calculating the VAT due, we just say 60 and we're just going to divide it by 6 because we know that we're doing 20 out of 120. It's just going to be the margin divided by 6. So we've got 10,000 that we know is due to HMRC for the year. Now, on the right-hand side of the calculation, we have TOMS VAT already paid provisionally. This is under our provisional calculations in the quarters. And we've paid 11,500 already. So we're only due to do 10,000. So we're actually now going to reclaim £1,500 from HMRC in the first quarter of our next year's VAT returns. And yeah, that just goes in your box 1 figure as a negative amount if it's a reclaim. So that's not as difficult perhaps as it can be in some cases. Now that's a very, very straightforward calculation. The next step is what happens if we have UK and non-UK travel business within 1 year. And this is perhaps the most common example we see. Most companies don't just do UK travel. Obviously, pre-Brexit, pretty much everyone had a split calculation because we had EU versus non-EU rather than UK versus non-UK. And a lot of cases now, businesses have very limited UK travel. You still have to do the calculation and to some degree, but it perhaps for a lot of people it's a lot better because so much more of the margin is zero rated. In a lot of cases, all the margin is zero rated because you do no UK travel. But anyway, this calculation example is what happens when we have UK and non-UK travel in a year. So we've got the same turnover, we've got 300,000 of turnover. We've got UK TOMS costs of 30 and non-UK costs of 210. And what we mean there is just any costs, what country was the travel taking place in. So if it's a UK hotel, that's going to go in section B in this example, the 30,000. If it's a non-UK hotel, it's going to go in C. The one thing I would say was flights. Flights may start in the UK and may be paid to a UK flight supplier, but the purpose of the travel, the purpose of the journey, if that is to go overseas, then that should go in category C, which is the non-UK section. So here we have total costs of 240, of which we've got 30 UK and 210 non-UK. So our gross profit margin is 60,000. But now we know we've got that margin, some of that is going to be relating to UK travel, some of it is relating to non-UK travel. And how we have to work that out based on this calculation is cost. Quite straightforward once you've determined the costs. And literally all we need to do there is think, okay, we know we've got total cost of 240. Our UK costs out of that are 30. So all we do is divide one by the other. So we do UK costs 30,000 over 240,000 to get our percentage, which I can't do in my head. So I think it's 12.5%. But I may be wrong, don't quote me on that. So I think it is about 12.5% of our costs are UK based. So we just basically times our margin by that amount, so by that 30 over 240. And that gives us basically 30 over 240 times 60,000 equals 7,500. So that is our VAT due. Sorry, that's our standard rated margin. Our VAT due is then 1/6 of that. The rest of the margin, the 52,500 additional margin, is all zero rated non-UK margin. So obviously that is UK VATable in a sense, but it's all zero rated. So the 7.5, our standard rated margin is our UK margin. So we just divide that by 6, or divide it by 6 even, to get a VAT due amount of 1,250. Now we've already paid provisional VAT of 3,000 throughout the year. So here we're due back 1,750 as our annual adjustment. And again, that's put on the March VAT return for this particular company, which has a calendar quarter, calendar year even. And yeah, in exactly the same way, that would be a negative box 1 figure again. The third type of calculation I'm going to talk through is what happens if some of our TOMS package is actually provided by us. Now we talked through earlier in this presentation that if you materially alter a service, it's not TOMS. But what happens if part of your package is not materially altered? So you buy in, say, the hotel, sell it on without doing anything to it, but part of the package is done by you. So maybe you're a coach company, so you own the coach, so you can't yourself bring the coach under the TOMS rules, because what you're buying in, all the sort of raw materials, and you are adding the driver and branding it and putting the coach together and the route, you've materially altered that coach. So that part of the package is not TOMS. So really what we need to do, I think there's HMRC's calculation, basically brings everything into, I think, 32 steps, and it's all a bit of a mess. If I'm honest, there's a bit that sort of shows you how to carve out the in-house amount, but really what we're trying to do with in-house services that we want to remove from TOMS calculation is just try and value out of that entire package selling price, or the whole year's worth of package selling prices, how much of that is attributed to our in-house service. Once we've got that, we can remove the in-house selling price and cost from the TOMS calculation and just carry on doing the TOMS calculation with our TOMS stuff, removed all the in-house, the effect of the in-house stuff. Now, one way of doing that is to look at the market value of the in-house services. So you could just say, okay, well, in a typical package, my package price is 1,000, which includes a coach guided tour of £500 that we sell separately as well, and the selling price of this coach tour is always 500. So we know that out of our 1,000 selling price, the market value of the coach is 500. So the other 500 has to be for the accommodation and the catering, etc. Now, a lot of businesses don't know a particular market value for their own in-house services. It can be done, obviously, and I think HMRC just asked that it's done in a fair and reasonable manner. But the most common one I think we see being used in terms of splitting a package selling price between in-house and TOMS is, again, just based on costs. So this is what we've done here, because I think it's probably not worth doing the market value calculation. It's just total turnover minus the market value gives us TOMS turnover. But I think this one perhaps is useful to have a look at an example at when we're doing the cost apportionment. So what we've got here is total turnover for all the TOMS package of 500,000. Now we're going to say our in-house cost is 250,000. So it could be coaches plus your own staff. Maybe your staff are doing the guiding as well. So it's a lot of this particular package is in-house. Then we've got our UK TOMS cost of 50,000 and our non-UK TOMS cost of 100,000. So we've got our total costs of the entire year's packages is 400,000. So all we do in terms of the cost value method of apportioning turnover between TOMS and in-house is we say what percentage of the cost is in-house, and if we work that out as the 250 over the 400, 62.5%. I've actually written this one down on the presentation, so it's don't have to do it in my head. So all we do is we say in-house costs as a percentage of total cost, 62.5%. We just basically do that exact same thing with turnover. So out of the 500,000 turnover, we say 62.5% of that is in-house. That's the 312,500. And then the remainder of that turnover, the 187,500, is then TOMS turnover. So that's brilliant. So we say, okay, our in-house turnover is a 312,500. That is now not TOMS. We remove it from our TOMS calculation. We still have to look at what the VAT treatment is of that. It may be, it may be zero rated if it's coaches. It may be something else. Our TOMS turnover, we then just take through and we do the exact same thing we did with our previous example of UK, non-UK, but now we just use the 187,500 as our turnover. And that's really, I'm not going to say that's all there is to it, but that's pretty much the basics, I guess, of TOMS. Everyone's calculations are different, but those I hope give you some idea of how to approach TOMS. Last thing I just want to talk through is that I talked about the provisional percentage, how we work that out. All it is we say, okay, what was our TOMS standard rated UK margin? And we've got there a figure of 7,500. Our total TOMS turnover was 300,000 in this year. So all we do is we say, what was our standard rated margin as a percentage of TOMS turnover? In this example, it's 2.5. So going forward, our provisional percentage next year all we're going to do is we're going to say turnover. We're going to take Tom's turnover per quarter times by 2.5%. That gives us our estimated standard margin. And then we divide it by 6 to get our provisional percentage that we declare on our quarterly VAT returns for the next year. That changes every year. I'm not going to say it's all there is to it, but that is TOMS in a very sort of basic nutshell. I hope that's been really helpful. Obviously, if you have any questions, please do get in touch with us at vatnav.com. Paul and I are always happy to answer questions. Yeah, we're looking forward to hearing from you. Thank you very much. And please do check out all our presentations on our channel. We're hoping that they're going to be helpful for everyone dealing with VAT and TOMS going forward. Thanks.